Shift, Command, and 5. All right, so let's move on to today. So today's topic is advanced market structure. Advanced market structure or algo structure. Now I'm going to divide it into 3 sections, either 3 or 2 sections, right? So we have today's call, Wednesday and Friday. So we just get to really understand it. And the next week we're going to discuss liquidity. So algo structure. Right. So today I'm going to keep it real simple and real short, right? So the first section is going to be identifying the swings or all right, so let's just move on to this. So I say identifying the swings here, identifying swing structure. Or we could just do this, identifying let's say algo swing structure. Algo swing structure. Swing. Oh, it's supposed to be algo. All right, algo swing structure. Right. So, just a quick breakdown from what we discussed during the last call. Right. What we discussed during the last call, please permit me. All right. During the last call, I did explain that the basic market structure is basically like this. Then this is your swing structure. This is your breaker structure. This is your high, and this is your low, higher low, right? So that means from this low to this high is a swing structure. So that means you anticipate price to what? What is this called? What type of structure is this? Corrode sensor, substructure, then the minor structure, right? Now the same thing again all the time. Now you have another break, right? So that means this low here to this high becomes your swing structure. So what are you anticipating price to do? Substructure, then the minor, right? The same thing, that's if you're in a bullish trend. Now, if you're in a bearish trend, you're looking out for the same thing, right? That means this is your high, this is your low, immediately after the break, right? So that means what are you anticipating price to create a substructure into this zone here, then sell off. Then now you have another swing structure like this. So what are you anticipating again? Price to tap into this, come into this zone and sell off. However, the algo market structure or the advanced market structure tells us otherwise. It tells us that whenever we have something like this, right? This is supposed to be a swing, right? Now the algo market structure actually tells us that most times, often, right, that this low will be taken out. So that means that instead of we actually trying to buy from here, price tends to take out this low first, right? So to actually really understand it, you want to see patterns like this. You want to see something like this instead, right? You want to see this low, you want to see another low, then price comes to take out this low, then you can have a continuation. Now I'm gonna keep it real simple for you guys for you to really, really grasp and understand. Right. Clear this one. Now for the first section, let me make it real simple for you. First thing is you want to, let's say you're in an uptrend, right? And you want to buy. So let's keep it simple. First thing, you want to identify each higher low in an uptrend. Each higher low, right? You say this is your A, identify it as a A. Please take note of this. Your first higher low is your A. Your second higher low is your B. Your second higher low is your B. Then this higher high. You see, we have higher high, and another higher high, correct? Then your third higher high becomes your C. Please pay close attention to this. Right. The first higher low is your A. The second higher low is your B. Then the third higher high, this is your first higher high, second higher high, and this is your third higher high, becomes your C, right? So it basically means that to actually see something like this play out, the price takes out this low, then a continuation, you always want to expect the B to be taken out all the time. You expect the B to be taken out, right? So that means that this is your swing structure. This A to the C is a swing structure all the time. A to C is your swing structure. Your B will always be taken out, right? Your B will always be taken out. It's just very simple. When marking out your swing structure, then find your algo swing structure, you want to see something like this first, right? So that means this is your A, this is your B, and this is your C. So what do you expect price to do? To create a substructure to take out the B, then a continuation. Let me do that again. This is your A, this is your B, this is your C in an uptrend, right? So you're anticipating price to sell, take out the B all the time, right? Then a continuation of the trend. Now this is for an uptrend. In a downtrend is all the same thing. So for the basic market structure will tell us to identify these as our high and this is our swing structure, right? So basically expecting price to sell into this zone, right? Buy into this zone, then sell off, right? Then continue the same thing. However, the algo market structure will tell us we actually have something like this instead. A sell, then this. So that means that this high here is your A, the second high is your B, and this low here is your C. So that means that this A to C is your swing structure. The A to the C is your swing structure. Unlike this one, coming. In this case here, in this case, you see, we actually anticipate price to actually come into the zone. Now, this is the basic market structure, right? We say price to come into the zone and sell off. However, the algo market structure will tell you that this I will be taken out first. On a normal day, right? This I will be taken out first before we now sell. So that means that this swing structure, right, is actually liquidity. So that means that this I will always be taken out for the basic market structure, right? That is why most often, I mean, most times, right, whenever we're actually trading the basic market structure, we see that price takes us out before moving in our direction, right? Which happens to a lot of traders, and they all complain that price took me out before moving in my direction. It happens a lot. It happens to me. It happens to every other trader, right? That's if you're able to understand the algo structure, it kind of like make it make sense. So that means when you have something like this instead, that means you want to wait for price to actually do something like this instead. Now you can now say, okay, now you expect the substructure to take out the B first. After price takes out the B, then you can now expect the continuation of the trend, right? So that means that for you to consider this as a new swing structure, that means you must see a B, right? You must see a B, right? So that means that now instead of this zone here to be your new swing structure, This one instead will be the new swing structure. This high to this low. This is now the new A, this is the new B, and this is the new C, right? So you anticipate price to do what? Take out the B and continue the trend. I really hope we are getting this. Please let me know if you are getting this in the comment section. Okay, you're getting it. All right, perfect. All right, so let's move on. So let me give you a chart example, a typical chart example before we, move on to the next phase. Before we move on to the next phase, I'll have to take a screenshot of this though before I clear it off. You should take a screenshot. All right, so earlier today, right, I did take a trade on Euro USD using the same concept, right? So now we actually, before moving to the next topic, which is really identifying the swing structure. First thing, you want to look at this, right? You want to see what price did here. I think I should, right? So look at what price did here. So I was able to identify that this is my swing structure, right? After price took out this I, right? We have a break of structure here. So I was able to identify that this is my swing structure. This is my new swing, right? This low to this high. So that means I was anticipating price to what? Sell, create substructure into this zone. Then I can now buy, right? So just very simple. Let me call price back. Call price. Or just clear the whole stuff. Let me remove the whole drawing. All right, so we are looking at price right now, right? And I can easily able to identify that this is my new swing structure, right? Because I'm actually anticipating buys. Price is obviously really bullish, right? We can see price breaking out of the structures. So price is bullish. So I can see price taking out this high. So now, how do I intend to actually continue buying, right? And I'm supposed to buy following the trend. I'm supposed to look for buys. But I can see this break and I can see this recent low here, right? So now where is the closest low to this thing? I can see another low here, which this low here particularly here serves as my B. Um, this particular low here serves as my B, right? Okay, I think this one is, I haven't shown you guys this one. Let me just show you a typical example of what I showed you exactly previously, right? Because this is another pattern which I will show you guys, but definitely not now. All right, perfect. This is a perfect example now. Now we can see that this is actually a swing structure from this low here, from this low to where this I, right, can now we obviously know that this is what our A. We know price is bullish, right? So this is our A. This is the A. This low is the A. This low is the B. This low is the B. This low right here is the B. And this high is the C. Correct? So this A, B, C. So now before price actually comes down here, right? Now this is where it gets interesting, really interesting, right? Now the basic market structure will tell us to do what? I mean, there's our tutors back then will tell us that you know, this is our new, that this is actually the break of structure, right? So that means that this is the new swing structure, this low to this high, right? And this is our new swing structure. So what are we expecting price to do? We expect price to, create substructure, sell into this, then, buy to continue. However, the algo structure actually tells us otherwise, that this B will always be taken out, right? So we have to wait for price to take out the B and come into this A, this first higher low here, right? You can see this higher low, and this is a second higher low, right? Then this is a third higher high. So that means that we always want to anticipate this higher low to be taken out. So instead of what a lot of traders are looking at to actually buy from here, you are already anticipating it to be taken out, right? You're expecting that low to be taken out, so you don't take unnecessary losses. While a lot of traders will want to buy, but the basic market structure will actually tell us that, okay, we should buy from here to continue the trend. The algo structure will tell us that no, this B will always be taken out. Then we can see what happened eventually. Our price took out the B aggressively, taking out a lot of traders, a lot of traders. Now you know that, okay, price has now tapped into this zone. Now what are you supposed to do? Buy. So now what you're supposed to do now, you're buying. You can now, after price now takes out this B, looking to now buy, right? To take out the C, correct? Now price continues the same thing again, creates another low, so what are you expecting the price to do again? Take out this B again, then continue the buy trade. As long as we're actually on an uptrend, you always want to see every B being taken out, right? That means we have our A, B, C. It's just very simple. This is our A, this is our B, and this is our C. So that means the A to the C is our swing structure. Now, what do you want to see every time you expect price to take out the B all the time? Then the buys can now happen. In a sell scenario, the same thing as well. Let's look for a perfect sell scenario now. Look for a sell scenario where we have something like that. So this is very perfect. This is very, very perfect. Now we have, let me cut price so you can focus on just that zone. Oh, yes. Let me cut price like this. Perfect. Right. So now you can see we are obviously bearish, right? Obviously very, very bearish. Obviously bearish. Now you can see what price did there. Price took out this low, price took out this low. Right. So that means this is our A, this is our B, and this is our C. Automatically, what comes to your mind, right? That price creates a substructure to take out this I, this B, right? Then price can now sell off. Correct? Let's look at this. Can you see that? Can you see that? So instead of you looking at this, I mean, a lot of traders would maybe to take a loss from here, right? They'll probably have the short positions right here, saying whatever this is called, the order block or whatever. And I know a lot of traders actually have that stop loss exactly like this. Then price rewards, take them out before selling. And this happens almost all the times. A lot of traders, it happens. It happened to me countless times. Countless times before I was able to really understand how how price action actually moves, right? But I was really able to understand it. So it happens, the buying and selling, the same thing happens all the time. So you don't want to, it's actually better to avoid being stopped out unnecessarily than to be the trap itself, right? It's better to avoid it than to be the trap and lose money unnecessarily, right? It's a lot better. I think I will just stop there today, right? On Wednesday, I will move further, and Wednesday's class should be a little bit tense, and then I just don't want it the recording to be too long, and then I want you guys to really, really grasp this thing and then really understand what we are doing here. I don't want guessworks. I don't really like guessworks actually. I don't really like guesswork. So I really want you guys to understand the reasons why you expect these things to happen. So now you are not just guessing. Now you're not saying maybe this low will hold. Maybe. Now you have a reason. You have a concrete reason why you expect this low to fail, right? Why you expect price to come as far as this zone here. And then like you really understand it a lot better now. But on Wednesday, I will be I'll put in premium, discount, and then equilibrium, right? To just make it make sense, right? We should really understand that you want to buy at the discount zones and you want to sell at premium, and the equilibrium you don't want to do having to do with to do at the equilibrium at all, right? So once you're able to understand that one, attach it to it again, it makes a lot more. It makes sense, right? It makes sense again. Then you're able to attach liquidity to it again, then it makes a lot of sense. And you start to see markets a lot differently and better. Let me come again, right? Structure is like the alpha of the market, like the main thing you really need to understand, because it's like a direction. It actually helps you to know the direction of the market. Where is price going to now? How do I intend to catch this buys or sells? Where are we even selling or we're buying? Structure will actually tell you when we are buying and when we are selling, right? Then liquidity or how good structure will basically tell you where not to buy from and where not to sell from, right? But liquidity will now tell you when to buy and when to sell. It makes all of it make sense if you just combine all of these things together. And then me simplifying my method, trust me, I'm able to just make it really simple, because back in the days where I used to had timing, these Asia black and blah 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 blah, it just didn't make a lot of sense. I get a lot confused. But when I sat down, spent hours in the chat trying to just understand, okay, if I can just make it a lot simple like this, I think it will help me, this complexity that I've been facing all this while, right? It just kind of like would make it better and maybe to see the market differently. And then trust me, ever since it's been really amazing, right? So just very simple. Just need to understand structure, really understand it. It's not something that you just go to your chat now and just mark out and believe that you really understand it, right? Until you start taking losses before you realize that you still have a long way to go. Structure isn't it's not rise and beans, trust me. And then yeah, one of my friends, JDI, he took a buy on USJPY, which I think I took the buy as well, but I actually didn't hold it. Now, why did he hold? Why was he able to hold? Because he was able to understand the structure, right? Understand structure. It's just as simple as that. The same thing. Let me show you guys to make it make sense to you guys. Let me show you guys the same thing I actually just showed you guys right now, which I'm very sure. I'm pretty sure he doesn't even know about it, but he just marked out the other block and that was it. Now you can see this, right? You can see what we have here. Let me call price back. Now you can see what we have here. This is a pattern as I just showed you guys today. Now, what do you think a lot of traders will actually want to do at this point? They want to buy, right? But because you now understand how go market structure, you now anticipate price to take out this low. This low now becomes your B. This is your A, right? This is your C, right? So that means what are you expecting for price to take out this low? So whatever anyone try to do here, you probably won't be involved, right? You wait for price to take out this low first, then you can now buy. Now, where is the next target? You know that this I is the next target, right? That is how JDI was able to hold the device because he understood structure. It's just as simple as that. As simple as that. Once you're able to understand structure really well, it makes a lot of sense and it becomes easy, right? It becomes easy. It makes it make sense. And you see that the same thing on all time frames. Remember during the last call, I said price is very fractal. Whatever happens on the weekly time frames happens on the daily time frame. Whatever time frame it is, it happens on all time frames. Now you can see this, right? The same thing on all pairs, everywhere, anywhere. Just understand structure first, then you once you now understand algo structure in depth, it makes it make sense. I hope we're actually clear. Let me stop recording now.